Ladies and gentlemen, welcome back to the channel. This crypto fiasco that has been happening over the last really couple of months is really putting hedge funds in a bad position, because on one hand, crypto was this great, call it dark entity, to make a lot of money, and these exchanges were blowing up. They were doing well. If you invested in crypto, it was seen as a very smart idea. And the problem is, hedge funds can invest in whatever they want. Hedge funds can buy art, they can buy coins, they can buy currencies, they can buy cryptos, they can buy houses, they can buy stocks, bonds, options, they can buy whatever the hell they wanted to. And crypto has a lot of leverage to it. So when these players are starting to go BK, like even FTX, all bets are off. Anyone can be next. And this is going to dig a deep hole in the crypto markets. At the peak of crypto value, all combined cryptos were worth over $3 trillion. Now they stand at about $800 billion. So they have lost well over 60% of their value. And what do we know about margin calls? When you lose over 50%, that's when the margin calls really start to happen. So hedge funds are in a very bad predicament right now. And how does this help AMC? Let's dive into it here in this video. So let's get into it, guys. FTX, I'm sure you guys know the situation here. FTX, Sam Bankman-Fried, was basically bailing everyone out. He even bought a stake in Robinhood because there was a lot of concerns about Robinhood going BK as well. And what this is doing is essentially squeezing out hedge funds with, each hedge fund that goes bankrupt, with each crypto exchange that goes bankrupt, with each billionaire in the crypto landscape going BK, it puts more and more pressure on the hedge funds. And like I just explained to you guys, you're seeing crypto go down 60% in value. Anyone that had a lot of money in crypto is not in such a good situation as of right now. And take a look at this new article that just came out as of last night. It says, exclusive, at least $1 billion of client funds missing at FTX. FTX founder Bankman-Fried secretly moved $10 billion in funds to trading firm Alameda, sources say. Bankman-Fried showed spreadsheets to colleagues that revealed shift in funds to Alameda. Spreadsheets indicated between $1 billion and $2 billion in client money is unaccounted for, sources say. Exclusive set up bookkeeping backdoor that thwarted red flags. Whereabouts of missing funds is unknown. So they basically just stole hedge funds, individual investors' money, and said, hey guys, we don't know where it went. It's essentially gone. And obviously, when billionaires start to lose their money, they want to keep a little bit tucked to the side, no matter whose money it is, so they are not down and out. It says at least $1 billion of customer funds have vanished, just vanished into thin air. And it does say a large portion of that total has since disappeared, they said. One source put the missing amount at about $1.7 billion. The other said the gap was between $1 billion and $2 billion. So obviously that is not a good situation. And you also have this happening. So essentially, since FTX has went BK, it sparked a lot of crypto exchanges to show their own proof of funds, like buying a house, right? You got to show proof of funds. You can't even make an offer without sending in the proof of funds with that offer, right? A real estate offer is like 4 to 5 different things. You gotta have a bunch of stuff. Well, crypto has not been that way. You could basically deposit your money with anyone and they could have $0 in assets. You could have zero security that your money is there at all. So what's this situation with Crypto.com accidentally sending $400 million in Ethereum to wrong address? CEO calls concerns FUD. And what it says right here is that after the shocking collapse of FTX, other centralized crypto exchanges are under the microscope, and Crypto.com customers are concerned after CEO Chris, I'm not even going to try to say that last name, acknowledged that his exchange accidentally sent 320,000 Ethereum, around $400 million at the time, to a public address registered at a competitor exchange. Blockchain records show on October 21st, Etherscan, Crypto.com sent the sum around 80% of its total Ethereum reserves to rival exchange GAT.io, just before GAT.io provided proof of reserves to its users on October 28th as part of a new push for transparency after the FTX crisis. And it says GAT.io subsequently returned the slightly diminished sum of 285,000 ETH, around 456 million, as a result of a minor ETH surge. On October 29th, Crypto.com released its own proof of reserves on November 12th. So what's happening here is essentially they're just swapping money around just to prove that they had money at the time, but now GAT.io can't prove their proof of funds. I would be surprised if Crypto.com could actually prove their reserves. There's probably some billionaire here with a lot of money trying to save their crypto in general, just sending this money around to different firms so they can essentially prove that they have the funds to weather this crypto storm. And the problem with this is hedge funds are 100% involved in the crypto markets. Most of the trading on a daily basis actually happens by hedge funds. So what we're seeing right now in the crypto markets and what we've seen in 2022 in the equity markets is not a good thing. But as you guys know, the stock market has started to rally a little bit, and hedge funds have been off sides of this rally just to get back to neutral, where hedge funds don't have more short positions than long positions. It's going to take days, if not weeks, to get to that point. And every day the rally keeps going higher. Hedge funds are losing more dollar for dollar than they are gaining because of those short positions. And if you guys haven't noticed, the crypto markets are not really playing along with the rally that we are seeing in the stock market, in which I think a lot of hedge funds hoped that that would happen. So as AMC specifically, we're talking AMC in this video, as AMC continues to rally, in which I think it will in this upcoming week, it puts a lot of pressure on hedge funds with short positions that have a lot of exposure in crypto. And the real problem with crypto is the leverage that you can get is absolutely insane, because nothing is transparent, right? You could say an amount that you have or whatever. FTX was worth $32 billion. The next day it's worth $1 and in bankruptcy, right? That's a big problem. And when hedge funds are leveraging out in the way that they are, once they actually do get a margin call or need to post additional collateral on a position, such as an AMC short position, that becomes a big problem. Or hedge funds that have positioning in crypto also having short positions in AMC, once they gotta get that collateral, if you know, they have to cover on their short positions to get their collateral back to basically uphold their crypto positions, that is going to be a big problem for them. So the deeper this shit goes in crypto, the worse this gets, the better odds of seeing margin calls happening in AMC. That also gets better. But also just releasing that collateral, just shorts covering in general to release that collateral, becomes a lot more likely and begins to make a lot more sense. Now, as far as AMC, where we currently sit, the short interest that we can prove is sitting at 20.5%. The free flow out on loan sitting at 36%. Shares out on loan 186.42 million. Days to cover 5.69, and it does have a 100% share utilization. Obviously, it's been this way for months. Cost to borrow rates have been spiking ever since this crypto situation has started to develop with FTX. Now, cost to borrow rates ranging in between 90 and 355%. The last readings that we actually did get was somebody shorting 9,000 shares of AMC at a cost to borrow at about 45%. So obviously, there is a lot of push and pull between meme stocks, quote unquote meme stocks, and cryptocurrencies. Whereas when one really starts to, decline and one starts to rally, depending how offsides you are in both of those, considering hedge funds are shorting AMC, so they're losing on AMC, they're losing on crypto, that's going to make for a very bad situation for hedge funds in general, especially as you will start to get more news about other exchanges going BK. If FTX is going BK, I'll be damned if other exchanges don't go BK as well. The only one that might have a better shot is going to be Coinbase, because their financials are publicly audited. So guys, that is going to be all for this video. Hopefully, long story short, you get it that crypto falters are positive for AMC, and the worse this thing gets, the more positive I think people should be on potentially seeing those margin calls, seeing shorts getting squeezed out of their positions, guys. So that is going to be all for this video. Expecting some very bullish things for AMC in this upcoming week, not so much for the crypto markets. Let me know what you guys think about this down below in the comment section. Hit that like button and subscribe to the channel if you guys want to come trade with me live in real time as well. Link down below in the description of this video. You guys enjoy the rest of your day. I will see you in the next one.